Hi, I'm Pat Keown, a senior research analyst with Refinitiv Lipper. I'm here to speak to you about fund flows activity for the weekend, Wednesday, August 12th. We'll start this week's report by looking at the overall flows results. Equity mutual funds had net outflows of $3.7 billion. Taxable bond funds and Muni bond funds took in $5.9 billion and $1.9 billion respectively. Money market funds saw net outflows of $17.3 billion. We'll take a quick look at the market activity for the week. The equity indices all recorded positive results for the fund flows trading week. The Dow Jones Industrial Average led the way with an increase of 2.9%, followed by the S&P 500 Index and the NASDAQ Composite Index with gains of 1.6% and 0.1% respectively. It was a mixed assortment of news this week on the economic and COVID-19 fronts. The Federal Reserve strongly encouraged Congress on multiple occasions that another stimulus bill was needed to help America through the COVID-19 crisis. Despite these urgings, the two political parties could not agree on terms for a new bill. President Donald Trump tried to fill the gap left by Congress with an executive order which focused on the extension of the monetary stipend that had previously been added to the unemployment benefits, although stipend was going to be at a much lower amount, eviction protection, a payroll tax cut, and student loan deferral. Economically, the Fed warned that the U.S. could expect muted growth as long as restrictions remain in place due to the virus. On the positive side, there was an overall increase in job openings. The Producer Price Index experienced its largest increase at 0.6% since October 2018, and consumer prices rose by more than anticipated last month. Looking forward, it was announced earlier today that first-time unemployment claims dipped below 1 million for the first time since March. New unemployment applications fell to 963,000, a sign that the labor market recovery is starting to gain momentum. Let's turn our attention back now to the week's fund flows activity. We'll take a closer look at each one of these fund asset groups and explain in more detail. First group to take a look at is equity mutual funds. This week's $3.7 billion net outflow was the group's 16th straight net outflow. As can be seen on the slide, domestic equity funds were responsible for most of this, as $2.8 billion left their coffers. If we get a little more granular and drill down to the peer group level, multi-cap core funds and global equity income funds suffered the two largest net outflows in the regions. Multi-cap core saw $1.3 billion leave, while global equity income had net outflows of roughly $251 million. Our next group is equity ETFs. This group took in net new money last week, a total of $9.4 billion. As the slide indicates, largest net inflows belong to the Invesco QQQ Trust at just about $2 billion, followed by the iShares Russell 2000 ETF, which had net positive flows of $1.3 billion. Conversely, Spider Gold saw about $1.1 billion leave their coffers, followed by the iShares Russell 1000 Growth ETF, with net outflows just shy of $300 million. Our next group to take a look at is taxable bond mutual funds. This group is on a net inflow streak. The $5.9 billion net positive flow this week was its 18th straight consecutive net inflow. The major players, major contributors to this week's net inflows were core plus bond funds and core bond funds with increases of $1.4 billion and $1.3 billion respectively. Moving on now, taxable bond ETFs. This group is also on a net inflow streak, 20 straight weeks here for the taxable ETFs. iShares iBox dollar high yield corporate bond product had net inflows of just about $620 million this week. That was followed by the iShares TIPS bond ETF with net inflows of $440 million. On the flip side of the chart, we see the iShares 20-plus year Treasury bond ETF with net outflows of $728 million, and the Spider Bloomberg Barclay 1 to 3 month T-bill ETF with net negative flows of $384 million. We'll move on to the next fund asset group now, which is Muni bond funds. Another group on a roll here, 14 straight net inflows from Muni bonds. This week they have 1.9 billion in net positive flows. Once again, led by the national Muni peer groups. Specifically this week were the short Muni debt and the general Muni debt funds groups with net inflows of 644 million and 477 million dollars respectively. Our last group to look at is money market funds. As the chart indicates, the third straight weekly net outflow for the group, about $17.3 billion left their coffers. The major contributors to these net outflows was the institutional U.S. government and the institutional U.S. Treasury money market fund classifications that saw $12.2 billion and $1.9 billion leave respectively. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please go to our website. It's www.lipperusfundflows.com. And please join us here again next week where another one of our analysts will be speaking about that week's fund flows activity.